Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for Wednesday, the 28th of June, 2017. And we're getting ready for when they wipe the boards out at 4:45 in the afternoon and you get ready for the next trading session at 5 p.m. Now, before I get into the charts or any commentary, I am going to take a few days off. So I am going to be gone on Thursday, that's the 29th of June, Friday, and Monday, the 3rd of June, returning to the office right after the 4th of July holiday, Wednesday morning, and doing the videos again. So enjoy yourself. Monday's going to be a so-so trading day anyway, so I'm really taking off 2 business days as I look at it. In looking at the markets, you had a good rally day today, probably at the expense of the dollar, and a number of currencies were up against the dollar. Part of what's going on is there's talks in Portugal going on at the there's a forum of European central bankers, and they're taking their turns talking, and as they're doing so, there's a common theme: tightening of interest rates in Europe. Because the U.S. has been doing so and they're just beginning it, you're starting to get bids in the foreign currencies as that is moving along. The gold market, well, the lower dollar probably supported it. I wish I could give you more information what's going on in the stock market. I can't, okay? Is the market really going to take off to the upside, or is this just a snapback bounce in the market? Where's it going to go? So maybe we take a look at charts and get a feel for it. You're still in an upthrust on the weekly area chart of closes in the NASDAQ. You still haven't had a close that takes out previous lows. So visually, and this is only the closes, I can argue you're still very much in an uptrend. You're obviously weakening a little bit because you certainly have lower highs, but you still have the higher lows, and that set the pattern in place. As you take a look at a daily bar chart, you can see how this low reached down today under everything and then came snapping back. Now, it did it before in this area too. So this area of 5650, well, it's offering a bit of support. The real test is, can you break through 5850 and 5900? If you can't, it's just a snapback rally, and you've got to be careful as to what the market does. In terms of a chart pattern off of swing lines. Now, I use swing lines so I can visually see the trend. And if you believe, as I do, that if you're trending, be it uptrend or downtrend, you've got something in the way of a stair step. In an uptrend, you make higher highs and higher lows. A downtrend has lower highs and lower lows, and no trend in some sequence has the current pattern of a higher high and a lower low. I don't care if it's flip-flop that you first made the low and then the high that took out a previous one. Won't matter to me. That is not a trend. And when you're not trending, what I look for is I look to see where's the 18-day moving average of closes. You should ask me why, and I'll answer it assuming you were here. It's because from that number seems to be where trends try to develop. Now, if you start looking, look at how often now you're hitting this number. It's not as though the market was trending here and it moved away from it. It's not as though it was trending here and moved away. And notice when you corrected, you went back to that average and you started fighting a battle. That's the battle I think we're in right now. As we look at Bollinger Bands, I'm going to roll back the data a little bit, and let's take you to Monday. At this point, you hadn't hit an upper or lower band. My theory of Bollinger Bands is right along with John Bollinger, who created this. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. I believe that the first time the market rallies up to or falls down to the band, it represents a theoretical resistance and support point. In addition, I look to see, is the band going sideways, or you're getting something of a trend into the band? Is it bowing out? What's it doing? This band is going sideways. That tells me the market's got more of a trading pattern to it than anything else at this point. Market goes down yesterday. If it continues down, my theory at least, the way that I teach in my charting course, is that if the market hits the lower band, that's where I'm expecting professionals, if they're short, to cover. I do not believe you go long at Bollinger Bands or short. And you'll say, well, look at how well I'd have done. And I'd say, yeah, you went short here. At what point did you call uncle before the market eventually ran out of steam? And I don't think you can measure it that way. So I don't believe in that. And it doesn't have to go back to the 18-day average. You can get where it runs, then it comes and it keeps working higher. I mean, everybody has a finite number of dollars, and that's a problem. So it's not the way that I teach it. Rather, if you get down, I'm looking for that to be the support area. And lo and behold, that's what happened today. The market came down, and now I'm looking for resistance at 57.77.5, let's call it, or 77.75. So that's what I'm looking at right now. Even if you rally tomorrow dramatically and get through this number, 58.52, you're not going to trend. You'd have then a lower low and a higher high. You get what I'm saying? You're not getting that stepping ladder impact. So I think my idea that the market will see some resistance at the 18-day average, I'll stay with. In terms of momentum, there is none. You are going absolutely flat to sideways in the slow stochastic. Slow stochastics, in my theory, and the way that I practice it in terms of teaching it, is that it leads price. And if it's flat, prices are typically staying within a trading range. That seems to be where you're at in that right now. In the Dow, you're in an overbought area, and the market has corrected, or correcting is the right word. You still have one of the readings over 70. I consider anything over 70 overbought, any number under 30 oversold. And you're still there. The market fell back, as you can see, to the 18-day average. It's looking to see what to do, and it too isn't trending in terms of the swing line. You have a lower low and a higher high caught in these Bollinger Bands that you haven't hit in a few days, so we'll see what happens if they can hit one side or the other. In the S&P today, very fascinating. Here's the S&P. It hit the upper band, and this was Tuesday's action. Monday it hits the upper band, Tuesday the lower band. Today it opens, goes through the lower band, comes on up and hits the upper band as well and stops again. And that's the key. The market's trading within those narrow bands. I'm looking to see which way it breaks out. And again, I'm not getting a real idea of momentum in the market at all. The market that's showing upside momentum is the Russell 2000. It now has higher lows and higher highs, but it's already up to the upper Bollinger Band. The odds of staying over it, only 5% of the time. And as you can see, it can do that, but how often does it stay over that number or under it for that purpose? So I think you're at a resistance point in that market, but it is in an uptrend. And if traders do anything, I think they're going to be buying the market at the 18-day average, and today's low will be important. They won't want to see that violated. If they do, this could be a trap for the bulls, so you got to be careful. In the VIX, caught in the sideways area of the Bollinger Bands. Look at them. Just focus in on the black line. That's the 100-day average of closes, the 18. You tell me what's going on. Has the market stepped out and increased volatility from time to time? Absolutely. What has it done right afterwards? It goes to that 18-day average, and it's been hanging here. And the reason is so many people are trying to figure out, can volatility even get less in the market, or is it going to pick up like it has a couple of times already in the past 2-3 months and blow out to the upside? The problem is each upside blowout has collapsed almost instantly. In the bond market, now that we're hearing these other central banks raising rates, or the policies are about to change, what's happening is the market ran out of its upside momentum, came down yesterday, today followed through, but hanging at that 18-day average. At the same time, you lost the embedded reading. Because when you lost the reading, and I'll come back here for you, you had the reading on Monday, you lost it on Tuesday, the objective's the 18-day average. You got right to it immediately. The market's still playing there. If the market wants to continue down, where do you think the next support level is? I'll contend it's the lower Bollinger Band around the 153.14 level. Is the market trending? It isn't. You have a higher high and a lower low. 10-year note, same pattern. incentive, higher high, lower and low. Now you fell down today, got well under that lower Bollinger Band, and right at the end of the day, I don't belong under there, and the market rallies and rescues itself. Again, that problem when traders get short under these Bollinger Bands can be very, very painful. I don't want to be the guy on that first breakout trying to do that. Now the dollar index, my eye goes to several things, but the first one, right off the bat, I know I'm oversold. I don't care what it does, I'm oversold. Next thing, you're down to the lower Bollinger Band. Each time it's done that recently, you've stayed a few days under it, then you drifted sideways into this pattern. But this pattern's important. This is a sideways pattern, and I'm getting more convinced in listening to the watershed events, as I call them, from these central banks, that they want to start raising rates. Maybe this last peak high is really important in the dollar, and possibly this market wants to push out that Bollinger Band. There is no trend for me to trade off of because, or make a recommendation, because you got higher high, lower low. But it's worth watching, and I've got a big downside bias in an oversold market. Euro currency's the flip-flop, and we've been talking that they were just mirrors of each other the other way. Lower and low, higher high, over the band, and overbought. So I'm looking at, by the way, this number, maybe the 111.73 is a big important low, and in the British pound, if it can extend further, look for your resistance at the upper Bollinger Band, but here too, no trend. Lower low, higher high. So a common theme, the currencies are looking for their way to get their legs under them, with the exception of the yen, which is bearish. Lower highs, lower lows, embedded reading, trying to ride the lower Bollinger Band. This used to be the currency they'd run to when there were events. Maybe it's lost that status because the U.S. is raising rates. Europe is talking as though in the next pattern, maybe as we get early into 2018, they're going to raise rates. The Bank of England said they're ready to raise rates. They're now taking bank capital, making the banks put capital back in. They're raising the capital requirement. And even the Bank of Canada, their central bank has said it could be July where they begin raising their interest rates. So a currency that says, no, I'm not going to raise mine, falls out of favor very quickly. Crude oil market, you know what I'm going to tell you. Here's the market with an embedded reading on Monday. You lose it on Tuesday. The odds are super strong that price is going to make a run at the 18-day average, or you can say the 18-day average and price will come together. One goes down, the other goes up. This was Tuesday. Here's today. Tell me that that isn't pretty working out. It is. There's no trend here just yet, but I wonder if this bear phase of the market is over now. That's the point that I made, and I said that today. Bonnie Quinn was interviewing me on Bloomberg. I should have smiled more, but I was thinking about, she was talking about crude oil, and I never know all the questions they're going to throw. You know, there's no way to know. And I was thinking about it, and I still think that maybe this is a trading bottom, and the market's trying to find now if there's to get its legs under it. Gasoline lost the embedded reading. Watch. Right here. This day. You should be going to that 18-day average. Let's take a look at nat gas. Had an embedded reading. Loses it right here on this day. That's Friday. Went right to it. Now, if it keeps going, the logical number is wherever that Bollinger Band is, the market tries to reach for that. It is overbought. It doesn't have to reach up there, but that's how I view it. If you'd like to learn what I'm doing rather than watching, let me share with you something. I give you here in these videos a fraction of what I teach in my charting course. I'm not just saying it's longer. You're not getting all the moving averages. You're not getting window envelopes. And these are numbers of window envelopes that you plot on your chart for potential resistance points other than Bollinger Bands. They're super important. And then what I do is you learn what's in the course, and then you watch a morning video. In the morning video, I'm not in it. Rather, I sit at my computer, got my headset on. We're going to cover 40 charts. I'm going to reinforce for you in today's charts swing lines, moving averages, window envelopes, slow stochastics, and Bollinger Bands. They're all going to come through there, and the game is going to start making sense. So almost 6 hours of videos, 54 chapters. I used to charge $200 approximately for this type of course. This is a brand new one. Each course I do is really very different from the other, and it contains a lot of different information, and I only do them every few years. I just did this in December, so it's 6 months old. It's not old at all. And what I do is I teach on this, you learn the technique, and then you start applying it. Now, I'll give you an example. I'm going to be moving on to pivot points, something very interesting the traders want. I think slow stochastics work hand in hand with them. How do you get the course to learn all this? Right. It's $99.95 now. It used to be $69.95 in December. Here's the guarantee. I'm going to raise the price again. But right now, if you type in IRA 20, you'll be able to get the course for $79.95. That's the discount that you get with it. In addition, you're going to get the charting software, a $99 value, and 30 days access to my information. And yes, if you buy it, don't worry. If I go on vacation, I make sure you make up on that, so you're going to get that information. Can't be any fairer than that. How do you get it all? Call my staff, 866-973-2077. Go to our website, www.iraepstein.com, under the word education, or simply click up here if you're watching YouTube. Take advantage of it. The discount ends in June, this June, and after that, you'll have to see what I do with prices, but there won't be a discount for a long time. You have a good day. I'm Ira Epstein. Remember, I'll see you July 5th.